people rich and why are some people poor? But in 2022, the gap between rich and poor is now accelerating. It's getting wider than the Grand Canyon. But a lot of the times, the people that are getting poor is simply because they had poor teachers. Their parents are poor, or they come from a poor background, or like in my case, they're all school teachers who think even a PhD, that's all you need.
Yeah, and unfortunately too, if they don't see the world the way it really is, they assume the solution or the solutions that are presented to them by the central planners and the politicians.
Correct.
They just take that at face value as that, oh, well, the solution for bridging the inequality gap, if you will, is just to tax the rich. We'll just take everything from the rich and we'll just let the politicians take what they want and then just give the table scraps to the poor, and somehow that will reduce the wealth gap. But as Margaret Thatcher said, that'll just make everyone equally poor. You know, what we want to do is we want to make the poor and middle class, we want to make them richer.
Correct.
And for whatever reason, well, it's because those people don't have that financial education that you've been talking about for the last 30 or 40
Correct.
years.
You don't get it in school.
Yeah, they assume that the way that you again, bridge that gap is by taking from one group, as though somehow there's like this fixed pie, and we have to realize that in free market capitalism, that pie continues to grow and grow and grow, and that brings up the quality of life for the people at the bottom.
And that's where going to the Infinite conference with Kenny, because it's infinite. Money is infinite. The media is so biased today, I can't stand it. Like 60 Minutes this past Sunday, just as IMF is making their announcement, this billionaire young entrepreneur, he's giving every kid a free college education with their parents. I said, well, it's good they're going to college, but what do they learn about money? Nothing.
Or what do they learn about Marxism?
Yeah. Everything.
Yeah, exactly. That's my point.
That's my book, The Capitalist Manifesto. If you want to be a Marx, go to school.
Yeah, especially college.
Yeah. Oh, it's horrible. So, George, how did you get so smart at such a young age? Tell us about your background.
Well, I retired in 2012, and I didn't know anything about the Fed. I didn't even know what the Federal Reserve was.
Where'd you grow up?
Portland, Oregon. Back in 2012, at the time I was in Las Vegas. I was fortunate enough to retire with a little bit of money, but I needed to make a 5 or 6% return to make sure that I didn't have to go back to work.
So you're an entrepreneur?
Yeah, I was an entrepreneur for many, many years. I knew how to make money, but as far as investing, that's a completely different skill set.
And did you go to real estate? What happened?
Yeah, I went into real estate because I was trying to find something that was cheap and cash flow.
Yeah,
that's right.
And debt.
And back
and
in
taxes.
2012, that was all of the above. And that was a good time to buy. So I went into real estate, but I really wanted to learn kind of how things work. And that took me down the path of Milton Friedman and Thomas Sowell and people like yourself and Jim Rogers and Doug Casey and Rick Rule and Jim Rickards and Peter Schiff and all these people. That's where I really got the bug.
That's when you get educated.
Macro. Yeah, that's right.
And the funny thing is, Kim met my rich dad, she's going, what is real estate? What is real estate? So we moved to Portland, and she cut her teeth on a little place called Eastmoreland.
Yeah, there's a golf course there. Yeah. Great golf course.
Eastmoreland Country Club, Eastmoreland Golf Course. And so she started buying her first little house there. The interest rates were like 9 or 10%. And she bought a little 2-bedroom, 1-bath house. She put almost nothing down. And she got $25 a month or $50 a month. It changed her life. She says, I can make money with nothing. It changes your mind. You go, I don't have to spend the rest of my life working. And interesting, her father was a Mr. Stocks and Bonds guy. He goes, what are you doing? You're investing in real estate. Mm-hmm. And she had to fight her dad. And thank God she had met my rich dad and my poor dad. And so she had 3 dads to contend with.
Yeah.
And we bought the biggest, I invited you to come. Kenny and I are in the biggest gold mine in the world. We paid nothing for it.
Yeah.
We get in for nothing. But that's the infinite return, which Kenny's having a couple of weeks from now.
What was fascinating, going back to that last event that we did in Dallas that you referenced, is we did a property tour, and we saw a lot of Kenny's properties there in the Dallas-Fort Worth area, some of his apartment complexes. After he took the group around,
100% debt.
He actually had a whiteboard. Did he tell you that?
No.
Yeah, so he had a whiteboard. We did a tour, and he took that whiteboard and he put it in the office, and then he had all of our people in our mastermind group. He walked through the numbers, when he bought it, how much he paid for it, how he paid for it, and then all the refinances that he's done through that forced appreciation, and how that equals these infinite returns. Yeah.
We have no money in the deals, and it's hundreds of thousands a month in income, tax-free.
Yeah, right.
Because of depreciation, amortization. But that's what we teach. But our schools say to go to school, get a job, get a 401k. I'm going, gag me. I mean, I would never do that. But if you had bad teachers or poor teachers or your parents said, that's what you do.
In and of itself is a horrible argument. Just invest in the stock market, your 401k.
Oh,
because
God.
what happens is these financial planners, I'm sure you know this. Yeah, exactly.
Who stole my pension, my 401k?
But see, this is very important because the game these financial planners play is they only show you charts going back to 1981. And this is when Paul Volcker raised rates. So since then, we've been in a down cycle in interest rates. And you can say the stock market always goes up, right, if interest rates are always going down. But what happens when interest rates start going back up? And usually the cycle is about 30, 40 years. So if you look at charts of the stock market going back to 1927 to 1980, or 81 adjusted for inflation, it was pretty much flat. But see, they don't tell you that. They just cherry pick the data
of course
they want to give to you in order for them to collect their fees.
But something even worse happening is the last crash was, let's say, 2008 when the repo market reversed and all this stuff. And most of these financial planners and real estate brokers, all they know is a rising market. Since 2008, we've been nothing, and happy days are here again because they kept dropping interest rates. Real estate went up, stock market went up, bond markets went up. And we were just talking to Ralph Powell, and he said the problem with that is that the bull goes up the stairs.
Yeah,
the bear comes out the window. So anyway, so you invested in property. Where was your property?
In Kansas City.
Perfect place.
Yeah, and my objective might help some people kind of think about real estate or assets in a different way. The first goal that I had when I retired is just to look at my monthly expenses and say, how can I get my money to cover those expenses?
Yeah.
And so how can I get my cash flow to cover these things? So then I know that I'm never drawing my savings down. And I think it sounds easy and it sounds commonsensical, but very few people just kind of connect those dots and realize that if they can create enough cash flow with their portfolio to cover their monthly expenses, that is when you're financially free.
Yeah, that's a cash flow game. Out of the rat race, all this stuff, you got $10,000 a month coming in, you got $7,000 in expenses, $3,000 net, you're free. And then we make most of our money from Kenny. Not most of it, but we get income from 13,000 or 14,000 rental units with no equity. It's pure debt. And we pay no taxes. We invest in oil wells. We don't invest in oil companies. Oil wells. And so when Biden took the Keystone XL pipeline, he cut that project. Oil went from $30 a barrel to $130 a barrel, 400% raise in one day. I actually liked Biden for about 20 minutes. But unfortunately, as you know, George, the problem is higher oil prices cause higher fuel prices and higher food prices, which is going to wipe out the poor and middle.
Yeah, because they're the people that get disproportionately affected because a higher percentage of their income goes to those things that are going up in price.
And they want to tax the rich, but there's too few rich. We don't pay taxes anyway.
Yeah, the problem with that argument, the cure for inflation is not more money. That's usually the cause of inflation or consumer price inflation. The cure for consumer price inflation is more stuff.
Yes. Produce more.
You got to produce more stuff. So if you're just taxing the people who are producing, that defeats the purpose. That's going to create most likely higher consumer price inflation.
That's what Sarah's complaining about is a baby formula. They got so many regulations, they can't produce it here.
Well, yeah, everybody's blaming this baby formula regulation on supply chain, but that's not actually what's happening. It's over-regulation. We just imported how many millions of cases of baby food? The United States, the greatest nation in the world, had to import baby food. Something's wrong.
We're consuming so much more than we produce, but we've been doing that for decades.
We can print money to pay for it.
Right, but we can't print food. We can't print energy. And at a certain point, if those countries that we're getting that from say, you know what, we're not going there anymore, we're not playing your game. So a great example, let's look at China starting to do deals with Saudi Arabia in yuan. Most people just see that and they say, oh, it's kind of the deterioration of the dollar. There's far more to it than that. So before that happened, China would need dollars to buy the food or the commodities, the energy they needed.
The oil.
So they needed to earn those dollars. So that's why they would export all these items that we buy at Walmart because they want our dollars so they can go buy the oil. They're in a very difficult position there. But if they start doing these deals in yuan for oil, now all of a sudden they can print the currency to buy the oil. They don't have to earn it. What that means, the United States doesn't have as much leverage over China as it once did, but they can start to tell the United States to pound sand. And if we can't get our stuff from China, where are we going to get it? We're not producing it here internally in our domestic economy. Where do we get it? We get it somewhere else at a much, much higher price, if we can get it at all.
Did you enjoy the video? Please let us know by smashing the like button and commenting what part of this video you find helpful. While you're still here, you can also check out these videos of Robert Kiyosaki. Thanks for watching, and remember to keep this investing tips a secret.